What's up, guys? Welcome back to the channel. Today I wanted to do a quick review on the stock market today. AMD, after the stock market close, came out with some pretty devastating news for earnings. We'll see what all that might affect. Talk about what my personal strategy is going to be during this time. Talk about the jobs report's going to come out tomorrow, and we'll talk a little bit about CPI and inflation and kind of what to maybe expect for the market. So real quick, we'll go ahead and look over the indexes. So the Dow Jones was down 1.15%, the S&P down 1.02%, the Nasdaq down 0.68%, and the Russell down 0.58%. The VIX spiked today a little bit, back up to 30.52. That was up 6.9%. Real quick, the S&P for the last 5 days, we were still up 2.77. We had a pretty good day Monday, Tuesday. So anyway, next thing I want to get into, AMD had some preliminary numbers to report, so let's go and take a look at those. So AMD, after the stock market closed, came out with a preliminary report that they were most likely going to miss the revenue by $1.1 billion from what was forecasted. So anyway, after, you can see here, after the market dropped, it went down 4.51%. So that will also most likely bring down, we'll look here in a second, like Nvidia, Qualcomm, Micron, those types of stocks. They're all semiconductors companies. It might also affect like computer companies as well as phone companies potentially. Anything that uses semiconductors. So you can see here, even if you don't own AMD, it's pretty big for the market. It's a $109.5 billion market cap with a 77.5 million average volume, like shares traded every day. The PE ratio is 28.53. Anyway, let's real quick look at Nvidia and stuff, and we'll pull up an article here. So you can see Nvidia got hit 3.14% after hours, and Qualcomm only down 1.18%. So you can see here, AMD warns of third quarter revenue shortfall on weaker PC demand, supply chain issues. AMD issued preliminary third quarter results Thursday that are well below its initial guidance. I'm just going to read the most important paragraph on this little article. The semiconductor company reported preliminary quarterly revenue of approximately $5.6 billion. It had initially said it expected $6.7 billion in revenue for the quarter, plus or minus $200 million. Anyway, that is a $1.1 billion miss on revenue. That's pretty big. So I know a lot of people were thinking earnings were going to be pretty bad this quarter. I was trying to stay optimistic, but man, this is not a good start. So this might be, hopefully this isn't too telling of what the whole market's going to be like, but if it is, then prepare for some crazy volatile stock market going on. If this earnings is so bad, it could actually trigger a bottom of a market. I'm not calling that, I don't know. But if this goes so bad that the prices go so bad on the stocks, that could be a wonderful buying opportunity nonetheless, whether it's a bottom or not. But I think we'll definitely have some volatility coming up here. I don't think this is just going to be semiconductors anymore. It might be whatever, any type of car company, retail. We saw Nike had bad earnings. Anyway, it might be a pretty rough earnings season here. So while I am not a financial advisor, I'll just tell you guys what I'm going to plan on doing. I'm personally just going to be dollar cost averaging into ETFs right now. If all these semiconductors go down to a pretty reasonable level, it'll be a good buying opportunity potentially. Also, it'd be worth looking into a semiconductor ETF. So this is an example of a semiconductor ETF. That way you don't have to buy a specific company. If you want exposure to multiple companies, you could just go this route if you think the semiconductor space in general will be bigger in 5 years from now. If this, I'm not going to tell you guys when to buy this or not buy this. If that's just something you're interested in, then do your own research on it. But that's one way to look at getting into a specific sector without buying one individual stock or having to buy like one or two of them. You can get exposed to all the different semiconductors this way. Now that all being said, I personally will still potentially buy stocks that I think are a good value regardless. Like you guys know that I like Meta. I have PayPal, I have Amazon. I'm not telling you guys to buy those stocks, but I think they're at good value now. Google's at potentially good value as well. So I personally will still be buying stocks if I think they're at a good value already. So guys, as far as the job report tomorrow, just remember the opposite of what you might think is what we want to happen as far as the stock market. So just remember if there's less jobs available tomorrow, then the Fed is doing its job by tightening and we'll be closer to getting a turnaround on the market. So hopefully that job report tomorrow is a good one as far as stock market's concerned. And then CPI October 13th comes out. That'll be such a big day. I'm looking forward to that day. I'm hoping that inflation's cooled off. We can hopefully start to slow down on our Fed rate hikes, and that'll be a good thing for the stock market. There's a 68% chance right now they're going to do a 75 basis point hike. Where the current target, we're at 300 to 325 basis points. That's like the Fed funding rate right now, the Fed interest rate, I should say. And there's like I said, basically 70% chance to go up 75 basis points, a 30% chance to go up only 50 basis points. So I think this next one will be another 75 basis points hike, and then we'll see. Hopefully CPI starts cooling down a little bit. The Federal Reserve has projected to go up to about 4.6. So if that's the case, we'll just have to go up another like 150 basis points total. So if we go up another 150 basis points, we'll most likely do a 75 this time, and then a 50 in like December, and then another 25 in February. If all that plays out, I think the market could potentially start to turn in January or February, because the amount of rate hikes is going to go down, like the amount of basis points will go down. So hopefully that can start us a new market. A lot of people are worried with these earnings and stuff, and I don't blame them. Just remember though, when earnings are down, and then next year when they have to comp against it, it'll be an easier comp. Like this year, they're actually having to comp against last year, which last year was like money was flooding into the markets. So just remember, this year's comp is harder than last year, and then next year should be easier than this year. And once those things start coming in looking better and better, then that's excitement back in the market. So hopefully we're just 3 to 6 months away from that. I still do think we're going to have a little Santa Claus rally here. So maybe after CPI comes out or something, there'll be some type of good news. We'll rally up through like December to midterm election as well. So October, November, December typically are decent months. Last month, September, was like literally one of the worst months in the stock market in the last like 20 years. One of the worst Septembers in the stock market in the last like 15, 20 years. If you guys are still with me, please consider subscribing to the channel. I'd like to build a little small community of like-minded people. Smash the like button, leave a comment down below. Let me know what you guys think is going to go on in this economy. It's getting crazy. We'll see what happens. And let's end up in this video with a picture of Pongo. So I took this picture of Pongo tonight. I actually got a brand new lens. It's like a portrait lens. It's 135 millimeter 1.8, if you guys know anything about photography. Anyway, this is after the sunset because the UPS guy basically had me waiting all day in my house. Here we are in my backyard though, and it's a beautiful lens. Like I said, if you guys are still with me, please consider subscribing, and I'll talk to you guys later.